Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachurdes and joining me is lead investment analyst Rafi Boyadjian. We'll be discussing the upcoming U.S. Nonfarm Payrolls report due out on Friday and the potential reaction in the dollar. So Rafi, the consensus forecasts for the NFP point to a slightly stronger headline number for June, but will Friday's jobs numbers add anything new to the narrative?
Well, Maria, as you said, we are expecting a slightly stronger report for June. Forecasts are currently at 690,000 versus the 559,000 we saw back in May. And that should be enough to push the unemployment rate down to 5.7%, down from 5.8% in the prior month. And we could also see wage growth accelerating to 3.6% year on year. However, although we are expecting slight improvement, the risks are probably to the downside because we are seeing these persisting issues of firms being unable to find the staff they want. So as was highlighted by the recent IHS market report, so firms are facing hiring issues because of those very generous unemployment benefits from the federal government. That's encouraging people to stay at home rather than go out and look for work. So these problems will probably persist until September when those benefits will expire. And also looking at the jobless claims, we did see claims nudge up slightly in the past couple of weeks. So we're unlikely to get a huge bounce in June at least. Although these effects are expected to be temporary. Now, the main upside risk is to the wage growth numbers because of those the labor shortages being reported by companies across the United States. But nevertheless, even if we do see much stronger than expected wage growth, that's probably not going to be seen as anything worrying because those wage growth will probably subside once those unemployment benefits expire. So on the whole, the NFP report will likely confirm the steady recovery in the labor market, but with little risk that the labor market is overheating. So pretty much that's going to confirm the current narrative.
Okay, so if the NFP report doesn't rock the boat, what reaction are we likely to see in the dollar? And what else will investors be watching out for over the next few weeks?
So if the numbers are more or less in line with expectations, that's really going to not change anything in terms of the Fed policy outlook. So we're unlikely to see huge reaction in the dollar nor in treasury yields. Now the US dollar did get off to positive footing this week, and the solid jobs report would help it end the week with some decent gains. But in the bigger picture, the dollar does have a good chance of extending its post-FOMC gains against some currencies which are already under pressure, such as the yen, but against other currencies like the euro, it will probably hold within a sideways range against the euro and possibly the pound, Aussie, and Kiwi as well. So investors are now waiting for fresh clues from the Fed. We've had some Fed speakers recently, and we're probably going to hear more from them. But in terms of any of them signaling any big shift in policy, that's probably not going to come until August. We do, of course, have the Jackson Hole symposium at the end of August, and Fed chairs have in the past used this to flag major policy changes, and we're probably going to have the same again this year because the timeline does kind of coincide with the Jackson Hole event in terms of where the recovery stands and how the Fed will have to move in terms of signaling that it's going to taper its pandemic stimulus. So until then, we could see some sideways action in the dollar, though the risk is probably slightly to the upside.
Rafi, thanks so much. And thanks for joining us at xm.com.